All right. I think we're all set here. So let me go ahead and kick us off. So welcome back, everybody. Happy Tuesday to all. And as always, let's go ahead and get started with our Engineering the Market presentation. My name is Jared. It is June 21st, 2022. Hopefully you had a engaged and just overall enjoyed the longer weekend from the market. We celebrated an off session yesterday, and we are back with a shorter trading week for the rest of the week. So let's quickly review what happened last week. And as always, we're talking mostly from the perspective of the S&P along with the expected move last week. So if you recall, we had a fairly tumultuous downside move in the market. Last week was fairly net bearish. If you look at a weekly perspective, the S&P started at one price, they sold off from that price, and outside of a small, I would say, bounce or just kind of move higher on Friday, markets pretty much closed near their lows. So it was a fairly tumultuous downside play in the S&Ps. From the perspective of the expected move, however, we also noted that the market was able to move approximately the entire expected move in one trading session. If you recall, we had a gap down open on Monday, S&P sold off and moved lower, and we facilitated the entire week's expected move on that day, which is, from a probability perspective, pretty rare. It also indicates that the option market is having a lot of trouble pricing in the actual moves. So the implied volatility versus the actual volatility has been off in the S&P. We've seen that historically where we have these large breaches of expected move that occurred on the previous week where we closed way outside of expected move. And if you notice, it happened again. Last week, we did move outside of expected move. And in fact, if you're measuring from the midpoint, so basically from Friday's close to the bottom of the expected move, the lower end, and then you double that range, we essentially got a 2 sigma movement last week. We didn't necessarily close at the lows, so we did have a little bit of recovery. But as far as the risk that you have to take to the downside, especially if you're selling premium against this expected move or just using it as a gauge of overall price movement, the warning last week was, unfortunately, the market is not really giving you what you paid for. Or in another word, you're taking a lot more risk for the premium that you're collecting. So that was the warning last week. We're certainly seeing that follow through as proof of that continual mispricing of implied volatility. And for the week ahead, given that it is a shorter week, we can look to see if the market starts to reclaim some ground. Not from a bullish price perspective, but more so, can the market stay within its expected move? Can it actually price volatility correctly? And in doing so, can that offer a bit of a relief in regards to price? Something that we'll talk about a bit further with other indicators. So for now, we're looking at the S&P and the expected move for the week priced at approximately $120 or 20 points. If we're measuring from Friday's close, that puts our top side level at about $37.95 and our downside level at about $35.55. Pretty easy numbers to remember overall, given the 120 point range. But what you'll also notice is over the past couple weeks, we have at the very least tested the lower bound of the expected move. So as a bull in the market, you might be looking for an opportunity for the market to bounce, basically oversold, faster sell-off that occurred into CPI and Fed related data, or simply just kind of playing the odds. The market tends to go down and then bounces occur off of wave-like structures. We'll look at maybe more of the technical side in just a moment. All of those probabilities are fine to work through, but understand that from a price perspective, the S&P is pricing a bit more downside if we get to the lower bound of the expected move this week, all of which would be around 35.55. So keep that in mind. You'll also note that we're obviously well within a bear market sort of scenario. Bounces are meant to be sold until the trend obviously changes. The thing that the S&P is not really giving us is a good bounce at this point. So we'll wait and see what the recovery bounces look like moving forward. And as we shift into more of a technical view, we'll look and see where some opportunities might lie, depending on how the market recovers. So let's go into just the S&P ETF. So let's just take a quick look at the SPY. One thing you'll notice is there is some definition coming into how the market is selling off. One thing you often will see a lot of TA style analysts perform is once they have a little bit more information, they'll start to connect the stronger trend lines in the market. From the perspective of our lower bound and connecting things like our first sell swing, our February 24th high impact low, and then some of the May lows, these are not perfect, but they are the first connection points. If you swing your trend line out, you'll notice that if I extend this trend line, we are below this relative support area. Normally, when you're in this kind of market condition, you will often have a higher point trend line as well, something more akin to a channel. And while you can have price activity above the channel, this is usually an overbought and oversold condition for the market. Obviously, we're still in a very strong downtrend, but from this perspective, you need to recognize that the market is a bit oversold. What often can happen here is we'll get some contention and price consolidation to some degree, maybe a bit of a sideways price movement. And typically at some point, we'll get back into our trading channel. Doesn't necessarily have to be on any sort of higher volume. In fact, the market can easily kind of grind back into these channels. But you'll notice that on our previous example here, getting back into the channel was actually a stronger sell event. So this might be something to be watching out for, not only to set up some sort of relatively long bias position, but it gives you an idea of how far the market can go in one direction, especially when you're sort of, I would say, testing or challenging one side of the market. If you recall, this move right here was almost a short squeeze or some sort of short covering rally, very unsustainable for the market, but it was also a really challenging time to get short any position. You had to wait until that basically faded or set up some sort of lower high in order to ascertain the risk to the upside. A lot of traders will also start to recognize that markets, for the most part, do move in these wave-like structures. So when we talk about being bullish or being bearish in the market, it's mostly about probability. The trend line, for the most part, will give you a sense of good risk to reward location based on previous buy and sell swings. It'll also give you a sense of when to start taking profit. So for example, if you were short and all you were looking for is the market to test the trend line, then for the most part, you were able to hit your target. Now, the market can obviously sell lower. It is a bearish trading channel, but overall, this is where you're basically taking something from one end, moving it to the other, and ascertaining risk each and every time you get to the opposite side of the channel. We've done this quite a few times in other markets. If you recall, XLF for a long time had a very clear bearish channel, so much so that a lot of trade could be taken off of these trend lines with very little in the way of confirmation, and for the most part those targets were met. Now obviously the slope of the channel can change over time. In fact, you can start to get inner trend lines that start to form, something akin to steeper sell-offs or just higher impact type sell-offs. Whenever things start to get more aggressive, the trend starts to accelerate. But in this way, you can see how for the most part you could have been long and short financial related stocks simply using this trend line as your indicator for long, short, or profit take in between. And the reason I bring this up is for the S&P, we can still sell off lower. You know, the idea here is that we're still in a downtrend. We're not seeing very impactful bounces as of late. And most bounces are either sold off, along with we're simply at the lowest prices we've seen for about a year. So when you go into the market and maybe ask the question, is the market going to bounce next week, or should I be long biased at some point this week? You'll have to put together a bit of a thesis idea in order to determine whether that's a good play or not. So one of the conditions you might say is that, yes, we're oversold from the trading channel perspective. We're underneath the trading channel. The trend is obviously starting to accelerate, and therefore I would prefer to see some sort of risk level. Where can the market bounce? And do I have enough evidence that the market is going to hold that low compared to simply a low that is bouncing and eventually will get breached? So for that, and for this week, we can start off with ES futures, which did trade yesterday, and we have a little bit more data in regards to what has occurred so far. Now, big picture, you know, these buy and sell swings are simply daily highs and lows, but you'll notice that the ES futures have this relative high. This is coming off of the Fed minutes and the FOMC press conference. Markets sold into that reaction. This is very common. We've seen this about 2 or 3 times this year, where the market sells the Fed announcement and the Fed minutes. We made a low, and then at this point in time, this low has been defended. We also cleared the high after the first low had been set or established. So from this perspective, you'll note that the hourly is in an uptrend. It's not necessarily the strongest uptrend in the world, but it's a very simple hold of a lower trend line. So we have shorter term time frames in favor of the bulls. From that perspective, we can say, well, this is simply a 4-hour bounce. Market is simply recovering off of a sell swing on the 4-hour. And that's true. So we expect the market to set some sort of 4-hour lower high, i.e., because we're coming from a position of weakness, usually a trend change is not going to encounter itself as a V bottom. You often want to be looking for lower highs, setting up higher lows, and that can form an idea of a trend change on whatever time frame you're looking at. Same idea here, though. We have a defended low. We have an area that the market was able to clear, and that set up our hourly uptrend. And then, of course, we have that 4-hour high impact pivot, at which point the market will likely need to trade in a more choppy or value-oriented location, setting up some establishment of support. Now, obviously, this is from the bullish side, so a 4-hour lower high is something that could be sold, but as a bear, they have to now defend previous pivots. And we obviously know what our daily looks like. It is a bit oversold from the perspective of that trend line. The idea that the market may be starting to see an overextension, a reach that is too far gone away from where you should become bearish. And the risk is that the upside, I'll say the move back to the upside is quite high. You know, the idea that the channel here can bounce moves us back into, you know, maybe like lower 4,000s. And that would, of course, take time and a little bit of effort, but, you know, that's what the upside risk looks like if you're looking at the channel. So that's our, you know, just higher level technical picture for the market this week. We're oversold, but what that means is we're at a channel support. And all we haven't seen yet is a low be established, a tradable low, something that the market can actually confirm via trend changes or via some sort of daily pivot. And when you bring that back into the S&P, obviously this pre-market is opening higher than last week. You know, the ES futures are trading a bit higher. We're probably looking to open about 370. If, for example, certain sectors in the market can perform today, then obviously we have a case for the S&Ps to start their daily bounce. We have an indecisive Friday session, a breach of Friday's high would obviously start the daily bounce. And then, of course, you're just ascertaining what sort of structure or pattern can the market take. We could reject here against the backside of the channel and just continue our sort of falling wedge structure where lows keep being made, but the follow through is very limited as soon as they're formed. We could easily see a higher bounce and something akin to a head and shoulders. It looks like my camera just died. Let's see if I can reset that. Okay. Sorry about that. Looks like my camera just flashed off. You know, that head and shoulder structure, the idea of a bounce strong enough for bulls to buy the next higher low attempt and then try to change the trend back to the upside. That, of course, would be a very strong reversal signal for the channel to take effect. And then, of course, if you're a bear, you just need to understand that this level, this area of the market is already well within its sell swing. So if you're getting short here, you're almost always risking short-term pivots simply because the risk back to the upside is hard to manage from a risk to reward perspective, especially if you're not using something that maybe has defined risk. This potential upside for a bull doesn't really warrant a 2 to 3 point short unless you're able to cap your risk a little bit higher, a little bit lower. So something like this daily pivot or an hourly lower high or a 4-hour lower high, something that forms on the shorter time frames will obviously be a better location to get short. And all you're simply doing is ascertaining what the risk looks like if that pivot fails. The market can easily press much higher and can do so very quickly. So what does that look like from the technicals on the sectors? And this is kind of where we'll summarize today. You know, I'm looking, starting maybe a bit higher level, expected move, our upside potential a bit capped on the expected move, but we do see that the S&Ps are pricing approximately up to about 37.95, so 3,800. What can take us there? Something like technology. We would certainly want to at least have technology not selling off. Similar concept here, and this is mostly why we don't analyze technology too often. You'll notice a very similar pattern. This has a bearish channel lean to it. We are at the lower bounds of that channel. And while there have been breaches to the upside, especially the first bounce in the market, you'll mostly see this is not necessarily a perfect parallel channel. You'll mostly see where the buys and the sells occur in this market. Buy near the lower bounds and selling near those upper bounds. What can help technology? Interest rates. Ideally, if we're starting to see the bond market find some flooring, the idea that the bond market is one of the stronger downtrending markets out there. But last week, there was some activity near the lows. In fact, we closed a bit stronger than the open. We had a bottoming tail activity. And we're not necessarily negating the bearish pattern. This is our bear flag structure. But the lack of follow through here is interesting. It's something akin to the market starting to basically counter the dominant trend. And there will likely be some structure forming here. We'll likely see some sideways trade over the next couple of sessions. From that point, though, does the market get more bullish, or is it starting to trade less in a trend, more in a, I would say, an accumulation style range? That would obviously affect our interest rate outlook. We're obviously seeing interest rates explode every time the bond market makes those fresh lows. But similar idea, there is a topping tail in the 10-year based on last week. It almost hit about 3.5%. That is roughly the inflection point that I was looking for. This is essentially a full high to low transition from 2017, 2018 highs. And we did spike it, but this area seems advantageous for countering the current trend, which is to some degree a bit parabolic. Another note from last week is energy. Now, you might say, well, energy is a strong market. That is something that would help the S&P bulls. And for the most part, you're right. If the energy market is moving up, there's sort of a 2 to 3% gain in the S&P for every point that the energy market makes. However, most other sectors have been weak during this time, and energy has sort of been the inverse play for a lot of bullish participation. Last week, we saw what is essentially our relative top. The size of the retracement, the speed of the sell-off, the volume behind it. It's pretty obvious that this market is changing in front of us. Now, does that mean that there's no longer bullish place? My guess is probably not. Usually, after a strong trending market has topped, at least in the short term, we're going to be seeing some sideways trade. And the thing to know about sideways trade is you want to understand where these impacts occurred previously, along with what your target should be moving forward. You can no longer look at all-time highs. Essentially, if you get long energy, you start to play a bit more conservative, somewhere mid-range. Usually I like to bring up where VPOC lies in the previous consolidation before the expansion. This is going to be somewhere around 76 to 77 in the XLE, along with understanding that the first bounce might be so oversold from an all-time high, or in this case, it's a relative high, that we might actually get to the upper bound of what is going to likely establish a trading range. A white coffee analysis here would basically say this is your preliminary supply zone. This is where the market formed the consolidation prior. And then from that point, we tried to expand, and we certainly made a move. Like, there's no doubt this is a doubling of the previous range. It's a very advantageous long that took place, but we just went a bit too far too fast, and the catalyst has changed. Energy is seeing weakness in both natural gas, coming off of a larger sell swing based on the news of the uh, liquefied natural gas plants out in Texas. You'll notice where this market is returning back to these lows. This is that similar idea of a rising wedge breaking bearish. This is naturally a bearish pattern. Along with crude, which is not necessarily as weak, but you'll notice is starting to lean a bit more back to the downside. So keep in mind, the energy market is going to be tradable. The idea that I'm trying to ascertain is what sort of style should you be using? And I think for now, you probably want to play this a bit more conservative long. You want to be looking for less aggressive upside targets and essentially just watching out for breaks in the lows. We're no longer supported by moving averages. We're going to be seeing some pretty high volatility if we continue to get other catalysts short term. But with all of this, if energy is no longer our lead bull, in fact, just as a note, energy did enter a bear market based on this drawdown. From the idea of just drawdown percentages, this is about a 20% drop. So it's not just a red candle, it's a bear market style setup. But with all of that, what sector is now going to lead the market? Are we going to see any bullish behavior in something like a healthcare, an XLV? Are we going to get some return back into consumer discretionaries? Once again, we would probably want to see things like our interest rates topping out, and that can lead a bit more speculative bullish behavior back into markets that are basically cut in half. It's worth mentioning that the XLY is down approximately 40% from its all-time highs. So these are markets that are to some degree discounted. And whether or not we get more bullish behavior back into lead sectors, ones that can actually carry the S&P higher, you want to be thinking financials as well, albeit we'll need to see what the structure looks like. Or is the market simply going to completely align bearish? Is every single sector going to be fighting, the uptrend or bounces in the market? And overall, we'll just see nowhere to run, nowhere to hide. I wanted to show this mostly from the perspective of utilities, because I think this is a key indication of what occurred last week. Not only was this a defensive sector seeing a larger sell swing, but once again, just noting where it sold out from, this market is now in bear market territory. We're definitely within 16, 17%. We would only need maybe another point or two to get down to 20%. So the defensive nature of the market is changing. There's bearish behavior in a lot of places. The question this week is, will that start to evolve back into the lead sectors? And what is going to be the catalyst for it? Will it be interest rates? Maybe a bit of volatility contraction, skew starting to unwind, or potentially something like inflationary readings still looking for that relative high. These are all, questions that we want to have, understanding where the market is located. So with all that said, that's my time. So thank you. Feel free to return tomorrow. We'll talk more about this, and stay tuned for pre-market prep. As always, trade safe, and talk more tomorrow.
All right. Good morning, everyone. Welcome to PreMarket Prep. I hope everyone's having an amazing morning. Hope you had a amazing and incredible long weekend. Good morning, Peter. How are you doing today?
Good morning, Carlos. I am wonderful. How are you?
Doing good, man. Doing good. Can't complain. Peter will be covering for Norm as he's on vacation at the moment and enjoying himself some time with the family there. So,
Yeah, I'm
shout
not
out
sure
to
if
him.
you have that picture that he sent us of him and the fam on the beach, but they are out in paradise enjoying
Oh,
some
yes.
R&R.
Yes, they are. I don't have it handy, but we'll show it a little bit later in the show,
There
and
you
we'll
go.
show you what he's up to this last couple of days. All right, guys, let's get to it. This morning, our gappers list a bit in the green. Let's see how long that's going to stay like that. But a couple of things in the green this morning. I feel like this market gets up to sell off a little bit, but we'll have to see. Uh, so we got some stuff in here today. Again, same names we've seen over and over again. Got some new ones on here. A little bit of a not low flows, but a little bit on the lower side. There's some stuff
Hmm.
in there. And we'll see what's going on. We got BP, we got Neo, Lee, a lot of the Chinese stocks in this list this morning up nicely. They've been trading so well and been so active, obviously, with everything going on over there in China, Catalyst, and they've been trying to stay strong here. Trying to get a bounce back, but we'll see how that goes. Oxy, we'll see what's happening there. And the Airbnb, wow, there's this list. I looked at it a few minutes ago. It's a lot bigger now than it was before. So a lot more names popping up to this.
It's growing.
Yeah, it is growing very, very fast here. So gapping down, not a whole lot. We got three there, and we'll take a look at those in our of course, red box, which is on our list every single day, seems like. We'll see what's happening with those three there. So, for the most part, overall market news, Peter, this morning, do not look at the economic calendar on the left hand side there. That is usually updated by Norm, and I know he has not updated that since he's in paradise.
Yeah. So this morning, not a lot of economic announcements. Really, we just have. I had it up here. I just got to find it again on the economic calendar. We this afternoon at noon at 3:30, we have two of the regional feds that are speaking. Normally, that doesn't have an impact unless they go way off script, but I don't expect that. And then we've got existing home sales that's coming out at 10 a.m. this morning. None of those are market impactful. Overall, in the markets, though, as Carlos just mentioned, we are looking up so far this morning. That's pretty typical after a long weekend. But we have to keep in mind that that is after, in the context, I guess, of a bigger downswing. I was just looking at our trading terminal, and if you go in the trading terminal and look at the overall market trends, I'll see if Carlos has got it. There you go. So look on the sector performance. If you look at a 1 week view, Carlos, you can see how big energy has been down, like so significantly higher than any other sector. But on a 1 month view, energy is still the biggest loser. But the others are sort of closer, with utilities and materials right behind it. Now we have to keep in mind that while we've got these sectors that are down big, energy is still, and Jared was just talking about this, is still an opportunity, because if you click to the year to date view on that, Carlos, you see how the picture is different. Remember how much energy was up at the beginning of the year. So while it's lost the most over the last month, that's in the context of huge increases that happened. And as we know, how long were we watching Oxy and others that were moving up, and natural gas and other areas where that energy sector was really seeing sort of big growth. So just keep in mind that we've got a market that has changed change direction in some areas and some segments very quickly. And as Jared was just pointing out, we are sort of on the verge of that 20% decrease overall to the market, which means that we could see more weakness despite the positivity we're seeing this morning. So you know what, as a trader, our job is to just watch what the market is telling us at any given point in time, and make sure you're understanding that direction and playing it appropriately. So with that, let's take a look at what is moving at this moment, and what we can do about it.
Yep, absolutely. Thank you, Peter. All right, guys, let's get to it. So our gappers list this morning, let's start there. Let's actually link my trade ideas. Let's do that. Go over here, tools, external linking, and we're going to just add a link here so we are set to go. Okay, perfect. So first one on the list this morning, leading up 83%. I mean, this VALN, so up 83%. Pre-market activities looking, it looks like is it a buyout? Looks like a buyout, right? It doesn't look too
It,
exciting here.
It's not exactly a buyout. In this case, Pfizer has made a big investment in them. So they haven't bought them out completely, but they have made quite a significant investment, which is what's given them the big pop here. Like you said, it's sort of it's not a low float. It's on the lower end, though, and it doesn't look exciting, the price action. So I'm not going to watch it myself.
Yeah, that doesn't look good. I don't like what I'm seeing here at all. That's got to get better. Let's head on down to SYM this morning, and this is not looking any better neither. I mean, look at this price action here. Similar volume, 142,000, which is not a whole lot. This is a 26 million shares flow, so a little bit on the lower side there. And just this price action right now, it's just not clean at all. On the daily, looks like we just started to get going on the eighth here. Didn't do much before then. Maybe a SPAC type situation, I'm not sure. But again, just started to get going here, and we're gapping up 32%, but it's not a pretty 32%.
Actually,
by any
well
means.
done. This is a shell company, but it's another one where there was news of a pretty big investment in them. So that's why we're seeing the jump today. But like you just said, same sort of story. Doesn't look great.
Yeah, does not look great. Let's head down to PTCT, and this one is PTC Therapeutics. We've seen this ticker come up before, and
Yeah.
it wasn't great. And I'm not seeing today anything fun neither. Up 27%, 355,000. Not sure if there's any news driving this that we might want to keep this on here for us.
Yeah,
But
there was a call that started. I haven't heard the result of it, but they were going to release the outcome of one of their drug studies for muscular dystrophy. So that is, I assume, what's pushing it right now. There must be some positive news, but like you said, if it was huge news that would create a great trading opportunity, you'd want to see a lot more price action than we're seeing so far.
yeah, absolutely. Right now, not really all that great at the moment. Could get better though. But again, it's
Good.
needs help. SIDU this morning. So this is a best pre-market activity we've seen so far. We haven't gotten too far, but best one so far. Up 14%, 1.8 million shares traded. Although we have a very interesting daily here, right? The last couple of days, seen a very large increase in volume, and that has been playing out in a couple of gap ups and big gap down days. What's the news on this one, Peter? Do we have anything going on? We should.
Yeah, so it's interesting you point out over the last couple of days because I'm not sure why it's moving this morning specifically. Last week, there was an announcement that NASA signed a $3.5 billion contract with them for what I think is like rover type vehicles. That's got their stock moving. I didn't see anything new as of this morning, but it seems like that news has got traction, and people are interested in the company based on the number of shares being traded so far. So we seem to have a lot of investment news that happened over this long weekend. So maybe it's just a place for money to go. Certainly, if you get a NASA contract, the general expectation with those is that if you get a $3.5 billion contract, it'll probably be $5 billion by the time you're done. So
yeah, agreed. I like this one right now, guys. Pre-market action looks very good. We got 1.8 million shares traded. Remember, this is a low flow sitting at 6.8, so I'm going to bring it down here to our low flow pile. But definitely in play, and you can see the last couple of days we've seen a very nice increase in volume. The first day looked very clean, not so much for the other two so far, but let's see. This pre-market looking very nice so far. All right, let's go down to Save this morning. This is Spirit Airlines, and I saw something on this, right? JetBlue's making the offer a little bit better. I think it's 33 something now. But that's good news for them. I'm not sure what else came out, but I know there was an increase in that for JetBlue.
Yeah, this seems like the ongoing saga, right? Will they buy them or won't they buy them? So they've had these two suitors for a while. They've sweetened the offer, but this has been dragging on for 2 months now that they keep talking about it. So I don't know. I mean, yeah. So could we see tradable price action today? Maybe. I have to admit, I haven't traded at all during this entire process because it hasn't really interested me enough. But that is the news, that they sweetened it to $3.65 billion.
You're right. All the news going on, it has not looked good. It's got gaps up or down, but it doesn't trade well. I guess until things settle down. And again, once they settle down, is it really going to trade well? Anyways, probably won't. So again, not the best thing right now until things get settled a little bit. This reminds me a little bit of talking about not being settled. What is Twitter up to? Twitter here is we're up slightly. This is another one that went through a spur of the moment type thing here, where it was just amazing to trade and not easy, but you did get a lot of volatility. Now it's just died down. I mean, there's really nothing going on with this stock that makes it interesting at the moment. So,
Yeah, I mean, it's sort of, this is another example of more of the same, right? So,
yeah,
in this
yeah,
case, Musk is still saying he wants more data. He's not convinced that the number of accounts is accurate, that they've got more spam accounts than they've reported. Why is that important? Well, really, I think he's using all of that as leverage to try and negotiate the price, and
yeah,
he doesn't
yeah.
want to settle the deal until he can sort of prove the relative size of the actual user base.
Mhm.
I think he's just using that as leverage to delay it to try and reduce the cost. So,
Yeah, yeah. You would think you would have that information up front before trying to make an offer. But again, maybe he really shot from the hip on this. I don't know. let's let's
well, I mean, he could also, like, never underestimate, Elon and his ability to think forward. So in a
yeah,
market
yeah,
that is generally declining, it sort of takes all boats as the tide recedes. So, he could be also just trying to milk this, drag it out, so that if the market does decline further, and therefore Twitter's perceived value declines, right, he can sort of get a sweeter deal on it. So anyways, whatever the reason, all we know is there's more news of delays, and Twitter continues to sort of trundle sideways, as you can see based on the daily, while they work to figure it out.
yeah, yeah. Agreed. Um, so again, Twitter, I'm not seeing anything great on here since we brought it up. So we'll keep this off the list for now. I'm gonna stop here because we got so many on this list. I'm gonna just skim down here and see which ones I do like. XPEV could be interesting. This morning they gapped up big on Friday and gapping up again today, 5.6. So that could be interesting on XPEV. Yeah, it's looking really good on the daily.
EVs are generally up. You see XPEV and NEO. NEO specifically had some news this morning where they've got a new model coming out, sort of a luxury series model with, that may be able to increase their percentage of market share, if I can say it, in China. So, I'm keep waiting for NEO to announce that they're going to expand the regions that they serve, and I haven't seen that yet. But it's still working well. That is, to me, always one of the best traders, because you just get so much volume. Like even today, already 2 million shares. Like, you just know you're going to
Yeah,
get volume
yeah,
on NEO.
yeah.
So
Dan
another
is
one you might want to
yeah.
look at,
Mhm.
that's unusual on the list, is Kellogg's K. We don't see that often on our list, but it's there this morning because they announced that they're going to split into three companies. So a little bit of an unexpected announcement, I think, from a market perspective. So that's got a little bit of interest. Whether that'll continue after the bell rings, I don't know. It is a NYSE stock, which just means it's going to move a little bit differently. So just remember that, keep it in mind. And it's undecided yet whether the market really thinks, is this a good thing or a bad thing overall. There might be some more details that come out today or in the next few days, but that's the news anyways, if you're wondering why Kellogg's is on the list.
Yeah, see it popping up here, 6%. Guys, again, not really a great trader, but it could be interesting today. See how that's going to play out so far. And I'm assuming this 540,000 is great volume, because if you look at the daily volume on this stock, you're not getting, you rarely get above 3 million shares traded on the entire day. So far, you're seeing a nice pop in volume here. Might be worth keeping as a passo for now. But again, it's got to look really good, guys, right? It's got to look good, because for the most part, this one doesn't trade very well. All right, we'll stop here. We have a ton, guys, but I want to give you guys an opportunity to throw some stuff at us, and then we'll go from there. Peter, anything you like? I know AMD is probably one you'll be looking at, right? As usual, which, by the way,
Uh,
looks good today.
yeah, there's nothing really special going on with AMD, but we'll see. I mean, if the market is seeing a little bit of positivity, I expect the semiconductor sector to be sort of at the lead of that and move up. But like you said, Carlos, we may see just a pop and drop again. I don't know what
Yeah,
to expect,
yeah.
but I'll keep an eye on AMD. Now, Are you going to move to the gap down list? Because there is at
Ah,
least
actually, yeah.
ACAD.
You know what? I wasn't really too interested in all these gap downs like EDU and Redbox, but ACAT
No,
can be actually interesting. So let's do that one.
right. So the pre-market action is strangely flat, but they did have bad news. So the FDA did not approve their drug. They said that I think it's an Alzheimer's drug that they said did not meet its endpoint. So that is what's pulling ACAD down. That type of news usually has a fair amount of price action and moves a stock. So I might put it on my secondary list at the very least, just to keep an eye on it.
Yeah, you're right. That is a great catalyst and worth putting on the secondary list here. They had a pop just a few days ago, so things were going well Thursday and Friday. And again, this morning, just getting that result has not been good for them. So we'll see what happens. 1 million shares trade. I expect this to trade much, much better at the market open. Right now, like you said, it just looks pretty flat. Let's hope we get some activity here. Look out for the spread, guys. I expect it to get better. Right now, 10 cents, on a $13 stock is not great. So hopefully that gets better. And you guys seen these other ones, guys. EDU, I'm not a big fan of. Actually, looks like the day looks like it's trying to collapse here below 21. We do have shares for sure if that's your thing on this one. I'm just not a big fan of the way this thing trades. But down 4.5 this morning, daily looks really, really interesting for a breakdown here. And then we have Redbox, which is another one that, again, just trades horrible, gets volume. Now we're seeing 37 million on this, 50, 74. So it's getting the volume, but I just think it's not a great trader, at least not the way I like to trade. So I'm going to keep that one off my list. But again, this one has been making a lot of noise as well. But ACAT for sure, looking pretty decent this morning so far on the gap down list. All right, so we have AMD, which actually, looking at AMD's daily, it looks really nice compared to a lot of the other tech companies. Look at the daily here. It's just the way it's been trading. Looks very clean. So that's good to have on deck this morning. 695 so far. And we are up 2.5 right now. Let's see how we're going to end the day today. All right, let's take it to the chat, guys. What do you guys like this morning? Neo is on deck. XPEV is also good today. Docu, I saw a couple of people throwing out Tesla. We'll take a look at that. DocuSign, we had the earnings, a week and a half ago. So this was fun here. That's it. It's like completely done after that. Is anything breaking out today? Do we have any news? Unless there's some kind of news, this is really not a tradable ticker. They don't get volume. When we look at this here, they just don't get any type of volume at all. But looks like something's happening here. Do we have anything interesting? I know it's not earnings.
They announced that they're changing some of their board, but other than that, that's all I saw. It's been years since I've traded Docu. To what you just said,
Yeah.
You always think it's going to get the volume, and then it doesn't. It tends to have a big spread and is a little choppy. So,
Yeah.
unless it pops up in the scanners later today, I'm not going to purposely put it on my list.
Yeah, and if it does, I mean, guys, take a look at that scanner. I already seen about 80 cents, 30 cents now, but it's been up to 80 cents so far for a $60 stock, and it can get worse. So just make sure you look at the spread on that before you jump in. And there's ways to trade stock that have a big spread. If you really want to get into, I mean, that's $1 right there. It's scary. There's ways to do that. Reduce your size drastically. Or try to get in with a limit order, right? So there's several ways you could do it, but again, it's got to be your style, right? If it's not your style, you can get caught with some unwanted surprises there. All right, let's take a look at CCL here. We'll look at Tesla next. CCL this morning is 1 million shares traded. I think CCL is interesting. Maybe it's a paso for now. I do like the pre-market action right now. We do have quite some volume there. We are getting a little bit of a pop continuation from Friday, so that could be actually, you know what? CCL could be decent today, but it's all going to depend on what the market wants to do. American Airlines, I see the travel sector also got a little pop on Friday. They're up 2.3 this morning, but don't have the volume yet on American Airlines, so we'll put them here for now. I mean, these guys have been getting beat up quite a bit here. Just continuous bad news and just cancellation of flights, shortage of pilots, all kind of stuff going on in this whole travel sector, and of course, the overall market sentiment here. Let's look at Becky. Yeah.
Oh, yeah. I was going to mention a ticker that Indigenous Pathways on YouTube was mentioning, GGPI. 1.3 million shares traded so far this morning, up 6% on the news of a deal that they're looking to close with Polestar. So another
Mm-hmm.
EV related play. I don't love the daily, I have to admit, and the pre-market action is surprisingly spotty for that much volume. So
Yeah.
they seem pretty interested in it, but I think this is another one I'd probably wait to see if it what it does after the open.
Yeah, market open will be good to see what happens here. I mean, the daily is not great, that's for sure. On Friday, right? 617. Looks like it traded pretty decent, right? On Friday. But again, that's just one day. It's all the fun over on
Yeah.
this thing here. Who knows? But again, without looking at the actual price action, how that was, they did trade. See, though, only 7 million shares traded. So if you look down here, you're getting very, although this looks clean, the volume is so light. I don't like that on a stock like this that's going from $8.70 to $10. It's not ideal. And here's the reason why. You don't want to get caught in something like this here. And we got a couple of minutes. This candle here, it opens up at 986 and then drops down all the way to 965 with just like 200 shares. 200,000 shares. So it's not great. I don't want to be stuck in a stock that can do that. And then the next candle pops. Yeah, just be careful with this thing. So it looks good, but I don't think this traded very well with the volume that you're getting here per candle. And no shares for sure. Agreed there, Anton. No shares for sure on this one. So it could be a little bit handicapped there as well. All right, Docu is good. Ben is giving us Baba. Let's take a look at Baba this morning and see what we got going on there. Baba has been really good this whole month, really. So let's see. But right now we're up 3.8, which, you know what? I like this setup on Baba, especially when the market it can sell off. This can be a nice situation for us here. So we're up 3.8, 1.2 million. I do like that setup on Baba. Not ideal as far as the daily, because we did gap down on Friday, big, gapping up again today. It'll depend on what the market wants to do. So I'll keep it on my list because it has been trading very clean during the intraday action. So I definitely like that there. We do have Becky. I'm not a big fan of Becky, guys, but let's take a look either way. I know many traders like this one. Gapping up this morning. Yeah, so it's just gapping up. It's got a little bit of volume. We'll have to wait for the market open, kind of like Baba, right? Got to wait for the market open to see how that is going to play out. What I like about Baba is that I traded quite a bit, so I know what to expect. Becky, I'm not a huge fan on. So, but again, I think market open, you're going to get more information on this one. There's so many things gapping up today. I think just because the SPY opened up green this morning, I think you got a couple of things in the green today. But we'll see how that's going to play out. CCL's volume higher. Yeah, CCL, yeah, it is. CCL 1 million. That's what you want to see on CCL. That is higher volume than what you're used to seeing. So that is why I have it on my list this morning. That is looking very nice there. Amazon, yeah.
I'm just reading some of the news here on Baba, how they're, the JD and some other retailers of the Chinese 618 shopping festival. It amuses me that there's a shopping festival. I don't know why you would want to participate in such a thing. Anyways, but and they're saying that interestingly, camping gear and home appliances were the top online purchases during this shopping festival. So, that type of news, when you do get these events, especially the online retailers in China tend to get a little bit of a bump because of the announced sales increase that they usually have. So, but you know what? They're usually good to trade, just like you're talking about, right?
Yeah,
JD,
yeah.
Baba, Billy, Baidu, those are the ones you can always keep an eye on just to see what they're doing.
It's funny that on Black Friday, they probably look at us Black Friday. What's wrong with these guys?
Exactly.
So to each his own. Here it is. Amazon, guys, looking really good this morning. 1 million shares traded on Amazon. So I do like that there. Daily's nice. It's just been consolidating here for the most part. Again, just trading with the overall market. So you have Amazon, you have AMD, you have NVIDIA. We haven't even looked at Apple yet, but that's another one that is just kind of moving alongside whatever the market is doing. But I do like Amazon this morning. Let's take a look quickly at Apple and see what's happening there. I'm going to add as a possible just because I have way too many on my list. But you guys know how we do with this one, right? If the market is trending nicely, this can be a good one. Although today we got 2 million shares traded on Apple so far. So it definitely got some movement. Yeah, I might move this up. I might keep either a NEO or XBEV. I know XBEV, Dan mentioned, it has to upgrade, I believe. But NEO is just, even if NEO is like Yeah, even if Neo is moving on what is it called on sympathy, it still
Yeah.
can be better than XBEV, even if XBEV have the news, because it's just a sheer amount of volume that you get. Like you mentioned earlier with Neo, makes Neo trades really, really good, and that's what makes us watch this one quite often. I mean, you already got 2.1 million shares traded on Neo, so yeah, I'll keep Neo. XBEV will be a good possible still. Both got an upgrade. Okay, yes, even better. So yeah, with that, I'll keep Neo on here.
Apple's always an interesting one for me, that it seems like after every long weekend, Apple gets a lot of volume pre-market on the
Mhm.
next trading day. I don't it's like everybody wants to catch up on their share
Yeah,
sales of Apple, but even if there's no news, it just gets volume. I don't
yeah,
know that it's
yeah.
going to move differently than any other day, but
Mhm.
there was some news about some unionization of some of the employees, but that's not something that typically moves the stock much.
Yeah. Phil Tesla. Yes, let's look at Tesla, and then we'll look at Phil's fix there. Tesla this morning. I mean, it's pretty much similar to like Apple, right? It's not doing nothing on its own. I mean, it's Tesla down at 600, man, 668. What a drop it has seen here. But yeah, Tesla's another good one that's gonna just follow whatever the market is doing today. I don't think they have their own news. Besides, I know some layoffs happening, but that's not new. That was released some time ago about them doing some layoffs. So I know that came up again over the weekend. I don't think that's really gonna affect them because that's nothing new that's been being announced now. Um, so we'll add Tesla here up 3% this morning. I do like the volume on it, but again, just kind of overall stuff with the market. Apple is good, and then Phil is asking us, do we trade UVXY? And this is UVXY. This is volatility index, right? And this is the short one, I believe. So yeah, you can trade it. I have not traded this in some time. There was probably 2 years ago where it was very, very active. But and I remember Andrew was trading at that point, but I haven't traded this in quite a while. So you could. I just stay away from it. Remember, guys, this thing is leveraged like I think times three, if I remember correctly. Is it times
I
three?
don't know. It doesn't say whether it's leveraged or not. I think it's
No,
just,
I think
it's a
this was not.
volatility
Yeah,
index.
yeah.
I tend to watch it just to see what's happening, but I don't usually trade it. I find a lot of these indices, they're hard to trade. Well, one, keep in mind they do attract much bigger fees, or
Yes,
costs.
yes.
So your
Oh yeah,
commissions will be higher just
oh
because
yeah.
they're American stock exchange traded. But that
Mm-hmm.
aside, I find that the trends always look good on the stock afterwards, especially if you're looking at a 5 minute chart. But to actually trade it, it's very jumpy. Like,
Yeah.
these ones, like, you might think a 5 cent move is sort of what you're looking to get, but it could jump the 5 cents and back again before you can blink. And
Mm-hmm.
I find that difficult, unlike a stock where you expect it to move with some sort of smoothness.
Yeah, yeah. Cannot agree with you more. And again, when we were trading the VIX quite a bit, I did notice that on your statement that commission adds up very, very quickly. So you want to be
Yeah.
careful with that. Okay, what else? GGPI we do have on. I thought we had GGPI, didn't we? GGPI, we looked at it. Oh, we didn't like
Yeah, I
this one.
mentioned
Yeah,
it, but
it,
it wasn't looking great. So
yeah, it's not looking great. So that's why we're not watching that one. All right. Okay. 9 a.m. guys. Let's go ahead and take a look at our community events and announcements. We don't have Norm doing our sheet today, so we're gonna go straight to our website. And let me just take you there. So if you come to bearbutraders.com and you come up here and you click on webinars, you'll be able to see what's coming up for the entire week and next. Just a reminder, we did not have the onboarding class yesterday, but we will have it tonight. So tonight at 7 p.m. Eastern time, we will have an onboarding class. So if you're looking for that, it was a holiday yesterday, we will do it today. So join me 7 p.m. Eastern time in the classroom. We will do our onboarding class today. And then Technology Monday. So that after my class, 8 p.m., we'll have the technology. And then we'll go into our regular strategy. And Peter, I see you got something coming up there as well.
I do. So, just because of the shortened week, we do not have a shortened list of activities. So we'll catch up with the onboarding for all our new members or those that want a refresher. Today, being Tuesday, is always about strategy. So tonight, Andrew's actually going to be talking about his trading approach. and doing a refreshed course on the 1 minute opening range breakout that he loves to trade. If you know Andrew, right, he's always he's always very active at the open, and usually does very well at it. So he's going to share that approach with you, and sort of give you sort of how he looks at the market. And it's a good opportunity to ask him questions about how he trades and how he manages that. Next week, I'll be presenting on trading a single stock. There are benefits and downsides of trading a single stock. We'll go over both, and I'll give you my perspective as to what you can look forward to, why you might want to consider it, and why you might want to be careful. So both of those are at 8 o'clock this Tuesday and then next Tuesday, the 28th. Wednesday is all about psychology, and this Wednesday we'll be talking about how to avoid or manage anxiety during trading. We all have some level of anxiety, and I actually think if you're not a little bit nervous in your trading, you're not paying attention closely enough. But there's a level at which it becomes dangerous or detrimental to your trading. So how do you manage that? And Mike is going to talk us through that and give us some insight. That's at 8 o'clock tonight. And the next week, we'll have Randy Howell back with us, who's going to be talking about keeping emotional control. We all, if you're in Sim and you're looking to go live, this would be a great time to attend this webinar to get a feel for, an idea of what you might be facing. If you've just gone live or have been live for a little while, another good opportunity here to get his perspective as to why does it feel so different, right? Like the tools and the technology is all the same, but when you put real money on the line, somehow the trading is always slightly different. And Randy will help us through that at 8 o'clock on the 29th of June. Thursdays are all about mentorship, and we have mentorship that happens throughout the day. John leads a mentorship class for all of our elite members at 11 a.m. That's in our webinar room. And then Ed usually closes the day with insight onto his trading strategy. And it's an opportunity to ask him questions. And then every Thursday night, we have Thor with his Thursday mentorship at 8 o'clock, where he takes all comers and answers questions about his VPA style using Camarilla pivot points. He goes over all of that and helps you understand what he does, which, by the way, he also does on a daily basis in the room, where he, at 1 o'clock when he's in the room, he's very good at sort of sharing his trades, telling you what he saw in the market, and answering questions about his strategy and style. But Thursday is a little more relaxed, and he can go more in depth with questions that you can't always do when the market is open. So that's our slate for the week. If you're looking to try and get some practice in outside of market hours, or to practice on some, some previous stocks that that might have set up for something you're looking for, try our stock trading simulator. It's completely free. If you sign up, it just saves your settings. It just makes it easier for you to get access. But Eamon also produces a list of recommended stocks and strategies you can try using the simulator, and he updates that regularly on a weekly basis, so you can sort of see, hey, maybe you can try this stock on this day and this opportunity. But try the stocks trading simulator. I've used it in a number of my classes, and I use it on the weekends when I want to back test strategies. So it's a great free tool that's available for you. And then earlier I mentioned our other tool that we have, which is the Trading Terminal. I'll just mention that quickly, just to say that the Trading Terminal is another free resource that's out there. We're building it up now. It's in beta trial, and we're all actively using it here in the room, or many of us are, just to give it a try out, to kick the tires and make sure that it's functioning. We got a ton of stuff in there, and we really want your input as to, is it meeting the mark? Is there other things you'd like to see, or are there things that you'd like to have taken out of it? But it's a great source of news, market oversight, earnings. We've tried to put everything that a trader would need in one place. So check out tradingterminal.com, and you can get access to that. Carlos was just showing you some of our deals. As always, we'd love for you to join either on a trial or on a monthly or annual membership basis. If you want to try it out for a week, PreMarket 24 is your code to get a $24 discounted 1 week trial. That gives you access to our onboarding class and the live chat room all day. Don't forget, we actually have 2 chat rooms, the main one, and then, of course, there's Ed's chat room in the jungle, where he trades a very different style. So you get to sort of see which community is right for you and which style do you want to learn about or watch on any given day. So we have both of those that run. And then if you do decide to join and pick an annual membership, Dr. Reed has very kindly offered to give you a free one-on-one coaching session. Now, these coaching sessions are extremely valuable if you want to accelerate your trading journey, or just solve or at least understand better a problem that you're facing in your trading. That one-on-one coaching session could be invaluable for you. So use the code READ50 to get that one-on-one coaching session when you sign up for an elite annual membership. So with that, we've got some levels to set, and let's do that before we get to the market open.
All right, thank you very much, Peter. Appreciate that. All right, guys, let's set some levels here. And we were just having a conversation. Actually, I typed this up, but I forgot to send it. Mickey was asking about XOXI, which is, again, it kind of does whatever all the semiconductors are doing. So like a MU, NVIDIA, and AMD, these guys will move. If the overall sector is up or down, this thing can kind of reflect that. But I kind of prefer when the tickers move, right? NVIDIA is going to have a better price action. Even Apple at some point, it's not a semiconductor, but it's all in that tech class, can move a lot better if this area is going to be strong. So I prefer to look at those. I think the price action forms better. If you look at this one, yes, it's going to have the same thing. It's going to look very similar to what MU, AMD are doing, but for the most part, I think those companies, the actual tickers trade a whole lot better as far as price action. Just my thoughts on that. All right, Chris MC just shared a picture with us there. He's Chris, are you in the hospital trading or on the computer? Man, get off the computer and feel better. So you have some stuff there. Hopefully you can recover quickly, and get back to your house there. So feel much better. All right, guys, let's get to it. Right now we have NEO, which is looking very good. Great volume. We have AMD, we have CCL, we have BABA, we have Amazon, Apple, and Tesla. So we got quite a bit. 1, 2, 3, 4, 5, 6, 7. One too many, but I think we'll be okay with those. And then secondary list, we have Kellogg's, which has news today. Normally we would never look at this, but again, looking good right now. We have ACAT, American Airlines, and we have XPEV, which again, either that one or NEO you can have on your list. I prefer to have NEO on my list. Okay, so you're home already. Okay, Chris MC, good. All right, guys, let's get to it. Levels here. Let's start with NEO. We are looking at high of the pre-market right now, all the way up at 22.18. Our low is setting at around 21.79. In here, I'm going to mark down this level where the price action is, because you are seeing a little bit of support there and a little bit of resistance. 21.92. I want to keep that. Might actually be a little bit higher, but 21.92 is a good area for NEO right now. Your pre-market lows actually all the way down here at 21.26. So we did have this one initial candle at 4 a.m. kind of go the entire range here. So 21.28 is going to be your low of your pre-market. Towards the bottom, I don't think you need to add anything else. You're pretty much taking care of their highs and lows, previous day close. That is all set for you. Let's see. Towards the top here, we are looking at clearly 23.97 is a good one. Here around 22.91 might actually be 23. No, actually 22.91 is it. You can see a couple of days slamming against that, so that's good there. You got plenty of stuff here towards the top, like that 23.97 is good. So again, I think NEO looking rather well of right now. Why is my dash flickering? That's strange. Never done that before. Here's AMD, guys. So AMD towards the bottom. We do have a couple of levels. So let's go back to AMD here. My dad's acting a little weird here. That's strange. Could be the user, but definitely acting a little weird. All right, so it could be the user. So here it is. AMD on 84.29 is the high of the pre-market. So we'll throw something there. Then you're surrounded by the highs and lows of last 2 trading days, previous day close. You got this great level here around, what's this, 86, which is already marked down there. That's a good one. Above this, if we were to push higher, you do have a nice level at 89.85. You can see that right on there, how clean that is, right? So perfect there. Towards the bottom now, below the lows of the last 2 trading days, we have not been down here in quite some time, but just in case, we do have a level right over here at a 78.47. I don't think we'll get there, but we're ready if the market is going to surprise us today with any type of sell-off. We have a level below our highs and lows of the last 2 trading days. Heading over to CCL, guys, this thing has volume right now. It is selling down a little bit, so it did a high of the pre-market right now at 9.99. feel like I'm selling you something, but that's the high of the pre-market there, and the low is at 970. So again, tons of value between these two levels right now. The daily does look interesting, has been getting crushed here. Had a good day on Friday. Again, gapping up today, but I think this is just overall market stuff. So we'll see how the SPY is doing. Eyes are going to be on the Qs, of course, just in case anything is going, and of course the SPY to see if anything rallies here. 1053, another level here. I wouldn't put too much weight on this one. 1016 also looks good. Unless we see some stuff here towards the left. No, I'm not seeing any support here towards the left here. And CCL is one of the one of the few tickers that is back to like right pre-pandemic levels, right? I mean, we are really getting beat up on this thing. Here's the chart, guys, going back to March when everything kind of settled down and bounced back from there. We're right at this level again on a CCL, and I think some of the airlines as well. I believe American Airlines got pretty close, a little bit higher now, but again, they're getting pretty beat up here. All right, let's take a look at BABA this morning. Let's see here, go back. All right, so CCL is good. Let's take a look at BABA today. BABA right now, you know, their dailies, I know their daily looks a little wacky, but they just been trading so clean. So definitely want to keep an eye on them. This morning, low of the pre-market, 105.80. Your high is going to be at 107.40. So tons of volume right now, guys. 1.4 million shares traded, stuck between the highs and lows of the last two trading days at the moment. I don't really think you need to add any more levels on this thing. I like the gap up today. I'll be looking for a sell-off on this, especially if the SPY is going to be rather weak or any type of weakness at the open. I think this could be a good one to sell off since it is gapping up today. Here is Amazon also gapping up 2% this morning. Very clean daily right now on Amazon. You see here, nice consolidation between 102 and 106. Looks like a little breakout play here towards the most recent highs. Let's see how that is going to go. So 109.98, 109.28 is the high of the pre-market, and your low is going to be at 107.52. Outside of that, just towards the top, because the bottom looks great with highs and lows of the last two trading days, we do have a level at 112, and we do have a level at 115.76. So plenty of stuff there for Amazon. All right, here's Apple, which is always a good one to watch, guys. Again, a great volume this morning, 2.2 million shares traded, 135.99 is the high of the pre-market, and we do have in here not the cleanest level, but I'm gonna mark down right where the price action is, or slightly above it, 133.92, might be 134. That could be a level of support, so resistance support there. Again, not that much weight on that. It's not a previous day close or any of these other levels we see a lot of touches on, but you do see some stuff this morning though. A little bit of action this morning here, especially in the pre-market as well. So definitely worth having that down. Last but not least, we have Tesla, which is up again 3.3. A lot of stuff gapping up this morning with the SPY opening up green. So 673 is your high of your pre-market. Your low is going to be all the way down 659.12. And then below that, tons of stuff there, 650, 640, 625. Highs and lows from the last two trading days. And then up here, you do have very clean level. This is your big level here, 706. 77. You can see clearly how many days are opening, closing right around that area. And then towards the bottom, we're going to have 690 on Tesla. So, all right, guys, that is what we have. Let's take a look at our moderators lineup. Oh, here's the man of the hour, loving the shades, Andrew. So as you can see here, Andrew's the screen must be really bright this morning, man. You go for a run or what? What's going on?
It's not even light out. I don't know. I'm surprised you can see anything. Doing his Eddie Wonder.
Looking good, my friend. Let's take a look at our moderators lineup this morning. Let's see what we got going on. All right, here it is, guys. And for those on YouTube, here's what our chat room looks like. Andrew's getting ready to go live. His screen is going to come up shortly here, so he'll be sharing his screen with us. Thor, looking at AMD, Apple, BABA, Amazon, and of course, the SPY and the Qs. You have to look at these things in this type of market just to see what the overall trend. Susan, Oxy, EDU, AMD, Apple, Amazon. Secondary list says Tesla and BP. Demo will be looking at Lee, BABA, AMD, and Apple. Eamon, not liking much today off the list, but he'll be looking at the scanners and alerts this morning. Peter, no IPOs, no SPACs today. And Andrew will be looking at Tesla, AMD, TQQ, NVIDIA, and Apple on his list. Megan, AMD, SPY, and PDD. So that is the lineup, guys. Looking pretty good this morning. Over on YouTube, thank you very much for joining us. Remember, guys, we do have two things happening. We have onboarding class tonight at 7 p.m. And we also have We also have our NYC meetup coming up this weekend. So take a look at that. You have the link available. You can RSVP. Brian coming in with his list here: EDU, ACA, ACAD, Lee, and also SYM. So guys, thank you so much for joining us this morning. Hit that thumbs up over on YouTube. It does help us out a whole lot, and we appreciate it very much. And we will see you guys tonight for the onboarding class and tomorrow at 8 a.m. Take care, guys, and trade safe.
Take care,
Peter,
everybody. Have a good day.
Thank you for covering this morning for Norm. You'll be on with us tomorrow when as
I'll
well.
be here all week.
Sounds like a plan to me, my friend. Thank you very much. See you guys.
All right. Take care, everyone.